All right. Let's go. Whew. Welcome back to the Daily Traders Podcast. This is episode number 32. I'm your host, Mark. This is my co-host, Jack. Welcome.
A little more energy than that. Come on, let's
More energy?
go.
All right, today we have a very special guest on, Eric K. He is the CEO of Goldbridge Capital. Very excited to have you, Eric. Welcome.
Thanks for having me.
Sweet.
So we're going to talk about how it's easier than you'd think for an 18-year-old to go from, very little education to managing a hedge fund. And we're going to talk about your story, how you got into the business. And I'm super excited for this. We had a long pre-show. We talked for about an hour before. And there's a bunch of stuff we got to go into. So let's kick it off.
Yeah, just to preface this, I called Eric probably about a week or so back. Normally we just do like a preliminary phone call, 5-10 minutes, tell him how the show works. We're going to send him a Zoom link, get a good email to send it to. We ended up talking for, I think, like around 2 hours just about the industry, going from like your story, my story. So interesting. So I've never been more excited for a podcast episode. Yeah, this is going to be cool.
Let's hop into it. Let's talk about your story. How did you get started? Or you want to talk about even your past acting career, which I thought was interesting. Just a little bit about you.
Yeah, well, it's funny you say that because for the first 10, 15 years of my career, I never wanted anybody to know I had pursued acting. And when I went to UCLA, my major was like cinema, television. But I didn't want anybody to know that.
Yeah.
Because if you're in the finance world, you don't want people to know you're an actor. Because then they're thinking, is he telling the truth or is he just acting?
Oh, very interesting. Okay.
So
okay. Fair.
But let me tell you the one benefit about being an actor. Successful actors have very, very good memories.
Yeah,
They have
remember lines.
like photographic memories. And for trading, you have to have good memory.
Oh, so you think being an actor, building that photographic memory is actually, beneficial? It helped you in your trading career?
Yeah, having a good memory helps, like probably in a lot of fields, but it certainly helps in trading because you're remembering all the rules, you're remembering all the patterns, because everything is like pattern recognition.
Okay. Very cool.
That's interesting.
We just want to take a second to thank this week's sponsor, thedailytraders.com. Now, if you guys are interested in learning how to trade and if you want access to see my exact trades, including entries and exits this year in 2023, go ahead, click the first link in the description. We're going to put a discount code right there so you guys can go ahead and join. But with that said, let's get on with the episode.
So you went from an actor. How old were you when you started your acting career?
When I started acting, I was, I want to say about 19.
19.
About 19.
Did you go to college?
Yeah. But I was acting in high school, and then I was acting in college.
You went to UCLA, and did you graduate?
No.
No? Okay.
No.
How come you didn't graduate?
Well, my thing was acting. So I was taking theater classes with some of the like most famous television producers like Don Richardson.
Mm-hmm.
And I just got busy with living in Hollywood and going on auditions, and it's hard to go to college and be a working actor at the same time.
Okay.
And then, then I had a kid. When you're a good-looking young guy, you're gonna have a lot of kids everywhere. So
I guess sometimes.
You gotta support them.
Yeah. Okay, so you have a kid. You're married. You're a car salesman, right? Correct me
I
if
have
I'm
3
wrong.
kids.
Yeah, 3 kids.
I have 3.
And you kind of had this moment where you're like, all right.
3 kids.
Yeah, so you had this moment where you're like, I need to figure something out to make more money. So you went to, where did you go?
So I was selling cars, and then what happened was my babies were getting to an age where like I needed to have the weekends off.
Mm-hmm. Yeah.
I couldn't work every weekend in the car business. I had to have the weekends off. So I was looking for a job, and I found an ad that said, and I'm going to convert it to today's money because I hate when they tell you the amount and you're like, that's not a lot, and then they go in today's money.
Yeah.
Because you look at a house in California then, a house in California now. So it said $300,000 a year, no experience necessary. Like if you saw an ad in the paper that said $300,000 a year, no experience necessary, sign me up, right?
Yeah.
So I called up the number, and the guy said, "Yeah, come down. We'll train you. We got a guy coming down." So I thought, fantastic, and I went down there, And in the interview, like I told you on the phone, he was selling me on the job rather than me having to sell, myself on getting the job.
Yeah.
He said, yeah, so they start next week. And at the time, like I told you, I didn't want to start working there until I can get my license. Like I wanted the Series 3. He goes, the guy's coming from New York. He's going to train you for 2 weeks. You take your test, you get your license, and you're off to the races. And he's like, but I could start today, just kind of like as an assistant or what have you.
Mm-hmm.
And like I told you, when I pulled up to the job, all the cars in the parking lot were Ferraris and Porsches and BMWs, Mercedes. And it was a Friday when I went down there. And so the detailer, the mobile detailer, he's washing all the high-end cars. So I was like, damn, I don't want to be tortured here every day and then not be able to pass this test. Because you don't know. It's like, oh, you got to take the bar exam,
Mm-hmm.
And nobody passes. And this is for your young audience, your 16 to 22-year-old audience. Trust me, guys, if I could pass that test, you could pass it. Anybody could pass it. I'm telling you, with the right coaching,
Mm-hmm.
anybody could pass it. It's an easy test. It's not even a math test. It's a speed reading test. It's basic math, but you got to be able to read fast.
Okay.
And it's a tricky test. Like Jack and Jill went up the hill, each with $1.25. How much did they have between the two of them? But before that, they'll say Jill was wearing a pink dress, Jack was wearing blue shorts, his shoes were untied. All that, it's in Hedge. Like, it's all just to kind of confuse you. You got to be able to be quick, answer the question, boom, you'll pass. Unfortunately, it's very easy, I'm telling you. But unless you're, understand what it is, you'll fail. Because in that course, the owner of the company paid a guy 20 grand. This was 20 years ago. So that's like 50 grand today.
Yeah.
So it'd be like paying a guy 50 grand to teach us how to get our license. And I'm in the class. There's 10 of us. And the teacher is like, okay, we're going to short the futures. We're going to short the oil market at, 30, $80, whatever. And then we're going to buy it back at, and I was like raising my hand. Remember, I came from the car business. So everything is all about how much you buy the car for and then how much you sell it. You buy and then you sell.
Mm-hmm.
He's telling us we're going to sell and then buy. Okay, we're going to sell. But what did we buy it for? I didn't understand shorting. I couldn't get my head around it. So I kept raising my hand and he kept telling me, oh, no, we're going to sell it and then buy it. Okay, we're going to sell it and then buy it. But that doesn't even make any sense. So he goes, get with the others at the break. So I got with the two stupidest guys in the class. I was like, hey, did you understand what he was saying? They're like, oh, yeah. And I thought, damn, so I'm the stupidest guy in the class, apparently. Then I had to, register to take the test. And I realized I don't understand options and I'm going to fail. So I called the Civil Learning Center, say, hey, I want to reschedule. They go, well, the company's going to have to pay us again to take it again. Like when you schedule it at that time, it was weird. You had to pay twice. And I thought, oh, they're going to fire me before they hire me. I better just take it and go, oh, well, I tried.
Yeah.
So I took it. Like I told you, I hit the pass button. And the reason I passed was because I knew I was going to fail. I was so relaxed. Like I know I'm going to fail. There's no problem. I'm going to fail. Done. Pass. What?
Wow.
So I went to work the following Monday and nobody was there. It was a ghost town. It happened to be Martin Luther King Day. So I went back the next day, Tuesday.
Nice.
And I go in there with the paper. Now the owner of the company made the big mistake. He goes, oh, you're the only one that passed. Oh, you can't tell me I'm the only one that passed. Now that means I'm all you got for that 20 grand.
Oh.
So that means I'm coming to work when I want to.
Yeah. Damn.
I remember one of the few days I was late and he goes, hey, why are you late? And I said, well, you want me to tell you the truth or you want me to make up a story? And he just looked at me like dumbfounded, like, wow, this guy's different. And he goes, tell me the truth, of course. He's like laughing. I go, the alarm went off. I didn't feel like getting up.
That's funny. So, all right. So what were you doing at this job? You were managing capital for private clients?
So at that particular firm, that was your typical retail brokerage firm. You raise capital, you tell people, okay, we're going to buy, this is what we're recommending. And then they would open an account with us. They'd send us some money, and we'd put on the trades
Okay.
for their behalf. They would take our, if they're taking our advice, then they're going to open an account.
Mm-hmm.
And so you got to raise capital.
Okay, so were you like cold calling people?
Yeah, I was cold calling the phone book.
Oh,
I was
geez.
cold calling the phone book.
Really?
Yeah. And so, I mean, it was the greatest experience because, as a matter of fact, at the very beginning, I'd be talking to somebody and I would tell them, I have no customers, I have no clients. And if you come on board with me, you'll have my undivided attention because you'll be my only client. And
Oh,
they're like, man, that sounds good. And if there's something I don't know, I can go to the owner with 20 years experience and he'll help me. We'll focus on your account and make sure you get the best service. I go, some of the other brokers have 100 accounts. You'd have all my attention. And they were like, man, I love that. So they'd open the account. No experience, no customers. I just tell them I got no customers. You be my, okay, they come on board. Same with the second, third, fourth, fifth.
nice.
So opening accounts, easy.
So how long did you
Like
work
you can
for
get,
this firm
prior to,
or this brokerage?
I
Sorry.
worked there for a good decade.
Yeah.
Wow. Okay.
Yeah, I worked there for a good decade.
Mm-hmm.
And you kind of worked your
I
way
made a
up.
lot of money. I made a lot of money at that firm. I'm going to tell you some crazy stories. You guys ready? Buckle in.
Yeah.
So I'm at the firm and I'm opening accounts, right? And I'm trying to win,
Mhm.
but I can't win to save my life. I can't hit the side of a barn. I just keep losing. So I'm reading books, and I remember one day I was so bummed. There was no YouTube back then. And so there was nobody to go on YouTube and see like what others do. I was just sitting there super depressed because I just kept getting my ass kicked. You know what I mean? Like it's like the second I'd buy, the thing would drop like lock limit down. As soon as anything I did was there'd be a freeze in Florida, and the price of orange juice would go down. There'd be what I mean? It would do the opposite of logic.
Uh-huh.
I was doing the exact opposite. So one of the guys came by and goes here, and he threw me a like a booklet of these trading and these guys and stories. So I was reading about this other trader that how he got his ass kicked and then became the best. And so it gave me inspiration, or gave me like hope. Because at that time, that day, I was in a hopeless situation.
Yeah.
But after that, where I am today, I could tell you right now, where I am today is the same mindset as Tom Brady. And when Tom Brady goes in and plays, and everybody's watching, and they got their opinions, um, Tom Brady his confidence never goes down.
Mm-hmm.
His confidence doesn't go down at all.
Yeah.
So, if you win one Super Bowl, two Super Bowl, three Super Bowl, or you become really proficient at what you do, you don't even see the losses. So one summer I played like 10,000 games of chess, and I finally was like beating level 10.
Yeah.
And when I look back at all the level 1, 2, 3, 4, 5, 6, it was showing all my losses. Like it would say you lost, 260 games straight. And I remember thinking, wow, that's wild. I don't remember ever losing once. But it's because when I would lose, I'd go, play again.
Yeah.
I'd just play another. I never looked, like I'd make a move, the computer would make a move and get me. I go, oh, you son of a, you ain't going to do that to me next time. And on the next game, I'd catch that move, but he'd get me down. You see me? It took me like 200 games to finally kick his ass. So I had the same kind of mentality with trading. So once you get to a certain level of trading, I can control the risk. There's a lot of things I can control. I can't control the market.
Mm-hmm.
So I'm gonna move my, you know what I mean? So my things are like, I want to have a 50-50 shot at making 10 times my money. Flip a hedge, you get $10. Tails, you lose $1. That can only be achieved with options. If you're just a equity buyer or a futures trader, you need to be right. Like you need to buy and that thing needs to go up, or you need to sell and it needs to go down. So you're going to be looking at those dumbass charts.
Mm-hmm.
But when you're an options trader, you're doing, you sell this one, you buy that one. You're looking for implied volatility arbitrage to sell the overpriced, buy the underpriced. You got defined risk and defined upside. So there was that. And then let me tell you, there was a book that someone gave me that changed my trading career. It changed my trading career completely. And the book was called The New Investment Superstars. And in that book, there was because I'm going to tell you the story. You don't even need to read the book. Okay. I'm going to tell you the story. The book is old, so it's not going to apply anyway, in a way. But 20 years ago, this book, The New Investment Superstars, there was a guy in there by the name of Ken Griffin. And Ken Griffin was 32. And at the time, I was like 20-something. He was just a few years older than me, but he was a multi-billionaire. And he became a multi-billionaire from trading.
Wow.
Jeez.
And I thought, how does this guy, how did he get, him, he was like you guys. He had a couple of buddies in college. They put together some money. They turned it into $1 million. And then I think it grew to 10 million. And that I could wrap my head around. I understand 1 million turning into 10 million. I get that. Mm-hmm. I'm with you. I didn't understand. How did you get to 5 billion? How did you get to 5 billion? And that's when I learned about managed futures. That's when I learned about hedge funds. And then he was a hedge fund manager. And so what would happen is, as they're trading, every month that he wins 3%, 4%. The wirehouses give him 100 million more. He wins the next month, another 100 mil, and another, and then $1 billion.
Wow.
And so I realized, that's how you do it. That's how you do it. You can't do it. You've got to just, be consistent in your gains. We have customers trying to turn $5,000 into 50. It's the $5,000 is going to turn into 50, or it's going to turn into 0. Mm-hmm. They're going to buy 10 call options in corn. Boom. I mean, we hit some, but we lost most of them.
Mm-hmm. Yeah.
And so that you're never going to get to the big money doing it that way. Mm-hmm. And so I started doing a lot of premium writing, a lot of just trying to grind out, 3-4, actually a little bit more than that percent. And then the money started coming in, and the track record started building. And so I had about 14 winning months in a row. And I was managing several $1 million. Mm-hmm. And one of the brokers there, you got to remember, when I started there, I was in 1998, I was new, and everybody else had a decade of experience. So when I had 5-6 years, they were still way ahead of me.
Yeah.
One of the brokers says to me, I go, yeah, I'm building my track record. He goes, you're not building a track record. That track record doesn't belong to you. That's not a track record. That's a record of your customers' accounts. And I was like, son of a... You mean I spent 1.5 years thinking I'm building a track record? Because you have to have power of attorney in order to build a track record. Mm-hmm. You have to have discretion in order for it to be a track record. There's things.
Yeah.
Now, don't get me wrong. I was making mid-6 figures. Mm-hmm. I made a good amount of money. Like I told you, I had 2 houses, one on the beach, one on the lake, two boats, like a Mastercraft wakeboard boat.
Yeah.
I had 2 golf carts, 20 vehicles. I had four cars and every kind of dirt bike and street bike you could imagine.
Yeah, living well.
Not bad when you're only making, you're not even making 7 figures. But then, as it grew, I was still at a retail firm, but I was like a de facto CTA. Because I wasn't an official CTA at that time, and I kept telling the owner, we should become CTAs. We should become CTAs, and he didn't want to change his model. Mm-hmm. But what I wanted to talk about with the kids is, look, you could take that Series 3, you could pass that thing in 2 weeks. I did. It took me 2 weeks to pass the test. You get that, and then I've seen some young guys that fast track to the trading, because I see you had a guy on your show not that long ago where he started with $50, mm-hmm. right? Remember that kid?
Yeah.
And then he's got to pay the bill. No, you weren't on it. You were hurt. You got in an accident. And then he has to pay his bills. So if you got $100,000 account and your bills are $10,000 a month,
yep.
Well, you got to make 10% each and every month, without exception, just to cover the burn rate.
Yeah.
If you could do that, if you could make even 3% a month every month, can you imagine the amount of money you would make when you're managing millions
Mm-hmm.
millions, billions. And so the side of the business that is fascinating to me is if you can get pretty good at not losing, there's so much money out there. There's more money out there than there are good traders.
So what's the process? Because everyone's like, all right, this
Um,
sounds great and all.
they allocate to so many people.
Yeah. So what's the process of becoming, a good trader? Like you were talking about your option strategies. Obviously, it's not the only way to trade out there. How do you go about becoming a proficient trader? And then next step is, getting connected with the liquidity providers that are going to give you $100 million, another $50 million to trade with.
That's a great question. Now, has Floyd Mayweather ever lost a fight?
No, I think he went undefeated. Yeah.
Have you ever fought a professional fight?
No. No.
Okay, so you right? Did I answer your question? So let me tell you this. You know what the Russian Olympic team does for wrestling? The Russian Olympic team, the Russian wrestlers, they train and 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 they get better and better and better and better, and they train amongst each other. But what the Russians do different than the Americans is the Russians do not allow their best, junior wrestlers compete in the open market because they don't want them to get their asses beat. Because when they get their ass beat, it breaks their spirit. It breaks their heart. So they build their confidence to where they're undefeated. So when they go pro or when they go on the Olympic circuit, when they're 18, 19 years old, they've never lost. You see? So some people think, oh, it's good to go in there in the UFC and get your ass kicked. You're going to get better. Not necessarily. A lot of people get their ass kicked and never go back in the ring. So you have to put the time in.
Mm-hmm.
Like you have to put the work in. And the work you have to put in it's very simple. What does a Super Bowl of trading look like? Well, that means you won the Barclays Pinnacle Award. So if you're in the $1 billion and over category and you won the award, guess what? You're the best.
Yeah.
And if you want, there's a difference between CTA allocators and retail people. If we see a guy that's killing it, the market got smashed, he's just uncorrelated to the market. One of the things we would do is we would allocate money to a manager that was winning. And we'd look at his methodology. How does he manage the risk? And then we'd invest with him. This wasn't necessarily the case for me because I learned it, but it took a long time. So to go back, some of the new guys, when they would come to the firm, I would say, hey, you want me to shave off 10 years off of your learning curve? Because they didn't teach me anything. There's a phone, there's a computer. These guys are all trading, and they would say, oh, it's option buying, and that would suck. And then the other guy would, don't do that, do option selling. And then you do that, and then you blow up when you're selling earthquake insurance. Yeah, it's great when it's going good until the earthquake hits. and so I learned by trial and error and doing. It took like a long time. Yep. I got good enough to trade where I knew I could beat the market, or at least I felt I could beat the market. And that took about 2 or 3 years. But remember, my 2 or 3 years be different than most people because I'm at the place 10 hours a day, all day. So my 3 years might be like somebody else's 10.
Mm-hmm.
You guys your brains are not going to be the same brains in 5 years from now as they are today when it comes to trading.
Mm-hmm. Because
when you're trading over and over and over and over and over and over, day after day, and you've got your equity runs and you're doing it, your brains are going to develop these much faster synapses, and you'll be able to look at something and know, boom, exactly what you're looking at. Because you can't be doing something all day, every day for 5 years and have the same. I remember one time I placed a trade, like maybe I was in the business 6 months, and I put on a trade where I was like doing some kind of a spread, and I couldn't figure out if I was long or short. Like if I was delta long or delta short, and and the market was like lock limit down, and I'm thinking, oh God, am I Delta long? Like, and I pushed the trades on. I had these back in the day when we got the tickets. So I got the tickets and I'm thinking, I'm dying. And I'm looking at my run, I'm looking at the tickets, and I'm still not sure. I run into the owner's office. I'm like, Stu, I think I fucked up. And I hand him the run, and he looks at the run in 1 second. Nah, you're flat. You're good.
Yeah.
And I was like, how could he do that? So, like, I put the trades on, not him. And I'm trying to figure it out for a good 5 minutes or 3 minutes. Or actually, when you think you're going negative, 1 minute can feel like an hour.
Yeah.
Right. So when he looked at it, I thought, how did he do that? But then flash forward several years later, and I was able to do the same thing.
Yeah.
So if you were to hand me the equity run, I would look immediately. My eyes just would go like a artificial intelligence. It would go immediately to the dates that the trades were placed, and I would see this strike price on that day, this strike price on that day, this strike. So I know right away you did a butterfly, and you were expecting the market, and then I see you did a calendar, and I see. So I could, just by looking at the dates and the positions you put on, the strikes, where you put them, what you thought the market was going to do. You figured it was going to do this, and then it was going to end up over here, just based on looking at the run.
Wow.
When I tell you, you expected the market to have a little pop and then a sell-off and just from looking at the run. You can't figure that out looking at an equity run in one, when you're just new. But when you've been doing it for a long, long time, your brain becomes like Tom Brady's brain when he's back there reading the defense.
Yeah. Right.
You know what I mean?
Yeah. So you only really trade options, or do you trade commodities? Because you have your series 3.
I trade everything. I mean, like, but let me put it to you this way. I've done more contracts in every futures contract there is than most people will ever do in their lifetime, because I did so much of it early on.
Mm-hmm.
You know what I mean? I did it. I went and studied with the guy who invented stochastics, Lane.
Yeah.
I went and did all that technical. So when people go, "Oh, you don't know about technical analysis," are you out of your mind? I've spent more hours studying technical analysis than you. You keep doing it for another 3-4 years, and maybe you'll catch me. But I'm not going to. That's just a filter. That's just I'll take. If it's not 100%, then what is it?
Mm-hmm.
If you ask me, how do you do the risk management? I put in a stop. Okay, now it stopped you out. Now what are you going to do? You're stopped out. What, are you going to get back in? What, put a lower stop? Like, you just keep getting smashed.
Mm-hmm.
That's not a strategy. That's you need a pew and you get down there and pray. So when people say, so this is what you do, you want to put, let's put this kind of, no. I've traded all the derivatives, all the futures, all the options, the equities, you name it. I've traded it. I'll trade banana chips and paper clips if it'll make me money. But if it's just going to be in there the same as the retail guys, well, why did I do this for 20 years?
Mm-hmm.
What did I learn in 20 years? That somebody learned in 6 months. It's like a 20-year trial lawyer versus a guy that's been going to law school for 2 years. It's like no comparison. But the good news is, you don't have to be. I remember when I was working at the firm, there was guys, like I said, with 10 years experience on me.
Mm-hmm.
But within a short while, I was the biggest broker. At one point, the other 19 brokers put together, I managed more money, me by myself, one person, than the other 19 put together.
Well,
okay, and they had all more experience than me.
Yeah.
Right. And so sometimes being young and stupid is a good thing.
Mm-hmm.
Because you don't know the risk, like you don't know the you know what I mean? Whereas they've been beaten up to where they're like, I don't want to do that. I want to go through that again.
Yeah.
Well, yeah, but in the meanwhile, I made all that money.
Mm-hmm.
It's like being an NFL player and you made $50 million and then you blew out your knee.
Yeah.
But you made $50 million.
Mm-hmm. Yeah.
So
it's like the boxer analogy.
Yeah.
But I want to give you some of the success stories. So you guys are in Boston, and the guy who owns the Boston Red Sox is a CTA.
Really? I don't know that.
Yeah. His name is John Henry, and he started from very humble beginnings. Let me tell you, the guy grew up in Victorville, California. He graduated from Victorville High School. If you know anything about Victorville, there ain't no money in Victorville. It's a little desert town halfway to Vegas. There ain't no money there. And if I remember correctly, I don't think he went to college. He might have went to college for a minute and then was like, nah, I'm out of here. But his claim to fame was he was, I think his family grew soybeans. So he started learning how to hedge soybeans. And then he started making more money hedging, like trading soybeans, than actually growing soybeans. So a lot of the farmers in the area were like, hey, can you do that for me too? And I read on Wikipedia that, like, because remember, I remember the guy, I remember the stories from back in the day, and then what you read on Wikipedia. And what I was told back in the day was he got so good at hedging, he was helping the other farmers, and then he started his own like trading program, and he moved to Newport Beach, and like in that 6 year span, John Henry Fund grew it into like, I don't know, 3-4 billion.
Wow.
And he was making crazy money. He bought the Florida Marlins, then he sold the Florida Marlins and bought the Boston Red Sox.
No way.
He's a multi-billionaire.
Yeah.
Wow.
Yeah, college dropout, multi-billionaire, self-taught trader.
So what are your thoughts on college? Or, I mean, it's a very controversial thing. Do you go to college? Do you not go to college? And to get your Series 3, you don't need to go to college. So, someone looking...
Yeah, it's like you talk about this, Boston Red Sox owner, John Henry. He didn't go to, he doesn't have some technical finance degree from Stanford.
Yeah.
So it's like, in order to, in the trading space to succeed, it doesn't sound like you need to go to some prestigious school to get some, special $400,000 degree in finance.
Right. Well, like if you're in the tech sector and you go to Stanford, you're not going to Stanford to get educated. You're going to Stanford to meet people.
Mm-hmm.
Yeah.
It's mainly the networking. Yeah. It's the meeting other like-minded go-getters at Stanford University that's going to, they're going to pool together. So it's really going where all the people are, Now, if you want to be a doctor or a lawyer, you got to go to college.
Yeah.
Mm-hmm. So did Steve Jobs go to college? No. Did Larry Ellison? Did Michael Dell? Did John Henry? I can go on and on and on. CTAs that didn't go. So it depends what you're trying to do.
Mm-hmm.
I remember I was at an economic summit down at Dana Point. Everybody was managing $1 billion. Like everybody there was like $1 billion hedge fund. The point was, I see the speakers and I see the guys that Goldman Sachs put up on the panel. These guys were, the $5,000 Zania suits, the like the cream of the crop, right? The Ivy League guys, and they're so eloquent speakers. So when I'm taking notes of what they're saying, I'm like, oh, do. And then somebody was introducing the panel. He had a dual PhD. He had a PhD in economics from Harvard, and he had a PhD in mathematics from MIT, right? Wow. Dual PhD.
Oh, my God.
And I'm like, right? Mathematics and economics.
That's insane.
And I'm like, oh, Lord. And I'm getting ready to take the notes, right? And this is how he starts. Am I going to write 52 times? What the fuck? This guy can't talk. And then somebody in the audience would ask him a question, and he would go, because it's like a computer analyzing like 500 different calculations to figure out the one answer. And you're just like, whoa, okay, now I know why the guy's got 2 PhDs. That guy has no social life.
Yeah.
Because he doesn't talk to people. Because he's just so maybe that guy does need to go to college.
Yeah.
You understand?
Yeah.
Because if you try to compete with that guy on paper, you're
yeah.
Right?
Yeah.
But if he tries to compete with you out in the marketplace, raising capital from the foundations and the college endowments, he's
it's a social game.
Because he can't talk. He can't get the words out. So what's he gonna do? Go around and say, hey, I got a PhD in mathematics. Yeah, that's good. So what do you got? Oh, that guy. Right? So
what
confidence?
What are you trying to do? Are you trying to impress your parents? Are you trying to impress your neighbors? The one good thing I will say about degrees, once you get your master's degree and your PhD, whatever, that's something they can never take away from you. Because let's say 20 years down the road, you look at your LinkedIn or your resume, whatever, it says graduated cum laude, it's got the degrees and everything. They can't take that away from you. But you could become a self-made billionaire, right? You're a trader and you made $1 billion over a 20-year period. And then you lose it all. Oh, now what are you?
Yeah.
You're
Yeah,
not a
that's
billionaire
interesting.
anymore.
You
See, when you're a
mentioned,
billionaire, you don't need a college degree. I'm a billionaire. But once you lose it all, you're like, I
yeah,
used to be a billionaire.
something to fall back
And they
on.
go, yeah, you used to be a billionaire. You're a loser now. You see?
So a degree
So
could
it
be
all
used as a
depends.
safety net.
Huh?
A degree could
Say
be
it
used
again?
as a degree could be used as a safety net, as like a backup, or at least it's like something they can't take away, something you can't take away, and you can fall back on.
Yeah, I mean, it's something that, like, look, when I was your guys' age, I was nowhere near the. You guys are much smarter than I was. I just have more experience.
Mm-hmm.
You know what I mean? And so, like, I worked my whole career. I work with people smarter than me. They're all smarter than me, but I just outworked them.
Yeah.
I mean, I just put in more grind. So I was more of a grinder than they were.
Why
So
is
you
that? Have you just always been like
why?
that? Do you think it's a personality type thing? Do you think what attributes to your success? What do you attribute to your success?
There's two types of people in the world: competitive and creative.
Mm-hmm.
Mm-hmm.
And I was very competitive. So I always wanted to be the best, at least at the firm. I wanted to be number one at the firm.
Yeah.
And then, from the firm, then you want to be the best at, you keep going like that. So I was very focused on what does it mean to be the best? I remember I was showing somebody, I go, hey, look at my equity run. My customers, I have the most money than everybody else put together, right? That's number one.
Mm-hmm.
Number two, my customers have made more money than everybody else put together, right? A lot of the other brokers, their customers were negative. They weren't winning, they were losing. They're taking high risk trades.
Yeah.
So, and then how much revenue did I generate for the company? So if you have 20 times the size as the guy next to you, you're going to make the firm. But I didn't make the firm 20 times because I didn't, commensurate. I made the firm. I was doing about 80, 50, 60,000 a month.
Mm-hmm. Mm-hmm.
But with the size of my portfolio, I could have done much bigger because it was commission.
Mm-hmm.
It wasn't 2 and 20 at that time. But back to your question, what makes what makes one guy rise above the other guy?
Yeah.
And I think it's like you got to focus on what's the task at hand. I remember, I think I told you this. I heard something on the way to work that said something along the lines of you can't make a diamond. You can only find a diamond. Now, obviously today you can make a diamond, but when this was said, it's like you couldn't. And I said, like, you're getting lumps of coal trying to turn them into diamonds. You got to find diamonds. So the owner, he just looked at me like, okay, whatever. But then he turned around and hired a bunch of Ivy League smart guys. I see these 5 guys walk in, they're all like 6'1" with the suits and everything. And because I was so much bigger than everybody else, those guys were like, who's the number one guy? Oh, that guy. That guy makes more money than everybody here put together. So they came in my office and they were like demanding I teach them, like, how did you do it? I don't even know you. Who the f are you? Why should I tell you? You're just barging in my office like I owe you something.
Mm-hmm.
I don't owe you nothing.
Yeah.
So I was like kind of just rapping with them just to see which one of them going to fade out. And like about 4 of them just was, I'll go figure it out on my own. I'll go whatever. But there was one guy that stayed in the room. His eyes were like saucers. Everything I was telling him, his eyes were like saucers. And once they were all left and he was the only one there, I go, okay, Brandon, I'm going to show you how to do it. I just didn't like the way they came in all arrogant and cocky, like telling me, how do you do it? And I told Brandon, I go, listen, the trick to this business is you got to make people money. Each and every month, you make people money. You make people money, and you'll never have to pick up that phone. I said, I hadn't picked up that phone in 5 years. Like, remember when I started? Hey, I got no customers. You'll be my first.
Mm-hmm.
Hello, calling the phone book. And then after a while, you got so much money. You'll never believe. You never believe how rich people are out there. They don't drive around like they'll live in a $300,000 house and have 10 million in the bank, or 10 million in their portfolio. But you would never know. But once you're making you're making the person money. I've learned that every person has 2 friends. And then that person tells his 2 friends, and that person tells his 2 friends. and it just word of mouth advertising goes like wildfire, right?
We hope you guys are enjoying this episode so far. I want to take a second again to thank this week's sponsor, thedailytraders.com. Now, if you guys are interested in seeing my exact trades in the stock market, including entries and exits, I will put a link in the description below with a discount code to join my mentorship group. You're going to get access to my exact trading system where you're able to learn the lifelong skill of trading while at the same time having access to see all of my trades with 100% transparency. So again, the link is in the description and we hope you guys are enjoying this episode. Let's continue.
The other thing I learned though is they don't recognize what you're doing from unless you spell it out. Mm-hmm. So like at the end of the year, I would look at all the investments that are out there, S&P, bonds, everything, and what their account was up, and I would write them a letter, thank you for believing in me and investing with me and and your investment this year with us has outperformed every investment vehicle on the planet. And I mail it to them. And they take that letter, like I didn't realize at the time, but they take that letter and go jam it in their neighbor's face.
Yeah.
And these are rich people down in Rancho Santa Fe. Mm-hmm. They go jam that, like the guy that, Ray Kroc McDonald's, that's Rancho Santa Fe. They go jam that letter in their neighbor's face. Hey, my broker's this is the best, like they're somehow smart. And then the neighbor would go, give me that guy's number. And they go, no way. And they run. And I know this because by the time the guy would call me, they would go, I tried to get my number from Dr. Bob for like 3 months. He wouldn't give it to me. Now, this was all stuff I figured out after the fact,
Yeah.
So if it was just like the word of mouth, maybe it would have grown a certain amount. But by putting the letter, so that's why I told Brandon, make the people money, and you'll never have to pick up that phone. And nowadays, you would never have to do a TikTok. You never have to do Instagram. Mm-hmm. They'll find you, mm-hmm. and they'll give you the capital to trade with.
You want to talk about how you started Goldbridge Capital?
Basically, what you want to do? Let me tell you. So it's at CTA. So like I said, there's some young guys where they were selling naked puts, mm-hmm. right? In the S&P 500, deep out of the money. And then sometimes they do some counters, whatever. They were selling some naked puts. And then within about a year, so if you're selling every month, like you're betting the market's not going to go, 2-3 standard deviations down. So every month they're winning and winning and winning. And their little fund is growing and growing and growing. And every month that you don't lose, the Sharpe ratio says, oh, this is a very safe investment. Mm-hmm. So the Sharpe ratio is a little bit skewed. It was designed for financial advisors to understand risk to reward, but it's skewed because think about it. If there hasn't been an earthquake in 10 years, the Sharpe ratio will say there'll never be an earthquake because there hasn't been, you see what I'm saying? Mm-hmm. But in my opinion, it's the opposite. The longer there's no earthquake, that means it's just a matter of time.
Yeah.
So it does the same thing with your performance. You keep winning and winning and winning. Well, you're going on a 2-3 year run. Well, let me put it this way: if you could win every month for 36 months, you're lights out, and you'll be at $1 billion because mm-hmm. you're winning for such a long time. The money just keeps coming, mm-hmm. especially if you know who to get in front of. So these guys, one kid was like 22, and I ran into him at the Traders Expo in Las Vegas, and I said, "Oh, hey, Aaron." His name was Aaron Wallace. I go, "Oh, I like your trades. I see what you did." I go, some of those puts that you bought, did you buy those just like to say that it's defined risk because they're so far down there, they're like pointless. It's just." And he goes, because I saw. You're selling puts here, and then you're buying puts that are so far out of the money, you're going to go negative. Like you're going to be negative before you get to those. And the volatility might not even expand that much on those. I said, did you just do that so you could say it's defined risk? He said, yeah, I did. And he's like looking at me, and he's like, how did you know? I go, oh, Anthony over at Lido Isle gave me the equity run and asked me to look at your positions. And he goes, oh. He goes, I don't like the fact that Anthony was a allocator in Newport Beach. And he goes, I don't like the fact that Anthony gave you my equity run to now you see all my strategies. I said, well, then give him his money back. I gave him like $1 million a trade. He's like, I go, well, then give him his money back. I go, of course he's going to show me what positions you have. He doesn't understand the options risk like I do. So he says, hey, Eric, take a look at this. How much exposure do I have? So I look and I see what it is, and I tell him, and then he's like, okay. So then I told Wallace, I go, well, give him his money back. He's like, oh, I'm just starting out. I said, don't worry about me looking at your equity run. All you got to worry about is keep winning. I said, you keep winning. I go, this time next year, you'll be at 30 mil. And he's like, he's like, you really think so? At that point, he was at about 3 mil, and we gave him one. He's like, you really think so? I said, yeah, if you just, keep an eye on those premiums and just roll and do what you do. I go, I've been watching, you're pretty good. As long as you bar some black swan event, you'll be good.
Mm-hmm.
The next year, there was a NFA with the NIBA, the National Introducing Broker Association. There was like an event in Newport Beach at Fashion Island. And he was there, and he comes up to me with smiling from ear to ear. Eric. He's like, I'm at 30 mil. I'm at 30 mil, just like you said. He was so excited. Like, he went from, hey, I don't like this guy looking at my stuff, to, oh, this guy, like, he believes it's like, from your mouth to God's ears. If you say, yeah, next year you'll be at 30 mil. It's like, yeah, from your mouth to God's ears. And then when I saw him the next year, he was at 30 mil.
Wow.
And so I think that year he made 2 mil, because remember, you get the management fee. The management fee is $600K, and then the profits was about 1.6. So he's like 2 point something mil. And this is a guy with that fund was only 2.5 years old.
Wow.
And at 30 mil, 30 mil is the hockey stick. So what it does, it goes like, the hockey stick goes like 1 mil, 5 mil, 10 mil, 30. But at 30 mil, it's like the elbow of the hockey stick. And then from there, it goes up to 300 mil. It go like you're growing and growing and growing and growing, and then it goes straight up. And part of that reason is they want to see, like, you have to like, there's a lot of big allocators that you have to have 10 mil under management for a certain amount of time. And then once you've got 10 mil under management for that set time, then a lot of allocators can allocate. They can allocate 100 mil, 200 mil. And I know what you guys are thinking. You guys are thinking, oh, that's a lot of money. But I was at that same event in Dana Point, where one of the speakers says, you allocators, you got to get used to writing $50 million to $100 million checks. I know you guys hate to do that, but you got to do that because these guys are emerging. They're just kind of starting out. The reason they don't want to write a $100 million check is because they have a $30 billion endowment. Do you know how many $100 million checks they would have to write?
Wow.
To allocate that $30 billion? They don't want to do that. They want to write 10 checks for $3 billion. $3 billion to you, $3 billion to you, $3 billion to you, because they have to vet. These are the trustees, the fiduciaries of the university. They have to vet these traders. You have to figure out, is this, because if that investment doesn't go good, then all the board members, breathe on their neck, get mad at them. So they don't want to allocate 100 mil. That's a joke to them. So it's funny in your world, you think, when you say I know you guys hate to do it. They hate to write those little tiny $100 million checks. They want to write $1 billion check, because they don't want to go through the whole dog and pony show of interviewing the trader. And then there came a point where a lot of the universities, I believe Harvard is one of them, where the trustees are no longer allowed to talk to the traders.
Really?
Yeah, because the traders get mad and they storm off. So the board has to talk to a consultant. So you have the allocators, and then you have the consultant, because the consultant knows how the trading works, so he can kind of be the in-between guy. I mean, one event where the chief of police, retired Miami chief of police, who managed I believe it was a $5 billion pension fund.
Yeah.
This guy doesn't know about trading. And one of the Goldman Sachs guys was talking. He goes, yeah, we've got these bespoke algos, meaning like custom algorithms. He's like, we got these bespoke algos, and we're, tailored to the fat tail, and da da da. And this guy raised his hand and goes, speak English. So when it kind of broke, I walked up to him. It's police and fire. I walked up to him. I go, I could totally understand why you were like, I'm a trader and I barely understand, bespoke algos. And he just looked at me like, who the hell are you? Then at the lunch break, he's talking to this guy. He's like straight out of Central Casting. He's about 6'4", 400-pound Italian guy. Just picture him with a wife beater, and he's the head of the Chicago Taxi and Mechanics Union, which also had like a $5 billion fund. And the both of them are going on and on about how they hate dealing with that process of figuring out where to put the money.
Mm-hmm.
And so I'm there. So I've been on both sides of the table. I've been on the trader side and the allocator side. So I could get the feel for what these guys want to know. And so he said one time he had a consultant, and she after the meeting, she told him, she goes, what you want, like she knew what he was trying to say, but he wasn't saying it right. She's like, you should have said this. And he's like, that's what I got you for. So he told me he fired her. Like, what do I need a consultant if the consultant's not going to jump in there and help me out? So once you understand the people that have the billions of dollars and their concerns of what are they going to do with it.
So how do you go from, because a lot of our viewers are probably smaller retail traders. So how do you go from being like a small retail trader, finally, you've been at it for a couple of years, you start getting a win streak under your belt. How do you transition from going from there to networking with, people like yourself or the allocators, and then starting to, get a 3 million under your belt, then 10 million, then that hockey stick 30 million, and then so on?
Yeah. So the one issue, let me tell you why I love retail traders. I love retail traders because when I worked at the firm and I was just starting out, I wanted to get good at trading.
Yeah.
I wanted to spend, and after work, I would go to the Options Industry Council meetups, meetings that they would host to learn about options. And I would get around other people that were options traders. They, at that time, if somebody knows more than you do, you think they're whatever. But once you get to if you're a white belt and they're a blue belt, they're like, wow. But then once you become a third degree black belt, then you look back and go, oh, yeah, they didn't know anyway.
Mm-hmm.
But so I was going to those things. But the thing is, these guys like you, they were so passionate about winning that they wanted to win. They got the 401k. They were so invested in learning how to be the best trader they could possibly be. And I love that because I was around these individual retail traders. Back at the firm, those guys didn't want to spend that kind of time learning how to trade. They didn't want to do that. They just wanted to raise money and throw it into the market with the least amount of, they're just flipping a coin, heads or tails. Okay. You know what I mean? They don't want to put in the work. They just want to make the most money for the least amount of work. They'll say, hey, what do you, like some retail traders were, oh, what are you investing in? Oh, Bitcoin. Okay, let me get into that. Like no work at all. Like no effort. Like, oh, I'm getting into FTX, so I'll get in that too. See, that was the other 19. They just follow the follower.
Yeah.
They follow the follower. So if you're going to be follow the follower, I'll tell you right now, kids, you can't be follow the follower. You got to have the mindset of, I want to be the best.
Mm-hmm.
And if you don't want to be the best, don't waste your time. The other thing I'll tell you is if you can't pass the Series 3, and I know everybody could if you put the work, you just didn't put the work. So if you don't want it, so the thing is, really, you're asking the wrong questions, but I'm going to give you the right answer. Your why has to be here. Mm-hmm. Why you want to be the best trader has to be here. And I'll tell you why you want to be the best trader. Because if you're the best trader, you're going to make so much money, you'll dwarf what football players make. You dwarf like peanuts. The only people you won't dwarf are Silicon Valley. Short of Silicon Valley, you'll dwarf everybody. Okay? That's number one. But number two, and the biggest reason, is when you're making your customers money, they think you're a living god. Mm-hmm. They treat you like a rock star. You guys might understand it a little bit to when you give a trade tip and then that trade wins and everybody falls. Totally. They think you're like, Christ reincarnated. Like they think you walk on water. They think so when I got a taste of that, I got into the business again, the business sports. But when I got a taste of how people were treating me, I was like, oh, that's addictive. I was like, man, and everybody, they just, right here, come right in, sir. They're inviting you to their kids' graduations. Like they just think you're the greatest thing since sliced bread. But then when you lose, oh man, you get crucified, like just like Jesus. One day, the next day, you're crucified. right?
Yeah.
So you don't want them to suck. You know, it's like a football coach. You win the
Mhm.
Super Bowl, you win the Super Bowl, you win the Super Bowl, they think you're the greatest, like Belichick.
Yeah.
But if you lose, they're like, that guy sucks. You don't want to be that guy. You want to be the winner, right?
Mhm.
So, but then the why, it's like there is no house you cannot afford. Like Ken Griffin did 16 bill this year, 16 with a B, and that's not bullshit. That's not bullshit. What do you call it? Silicon Valley. Silicon Valley, they'll issue. Let's say the three of us went into business, right?
Mhm.
And we issue 1 billion shares of our new trading, what have you, right? And we come out IPO at $1. You sell one share to Jack for $2. Now you have a market cap of $2 billion. He's only bought 100 shares. Then he sells me 100 shares for $3. Now you got a market cap of $3 billion. And they go, this guy has a net worth of $3 billion. Yeah, but it ain't real money. You only sold 300 shares.
Exactly.
That ain't real money.
Mhm.
But the money that Griffin made, that's cash.
Wow.
That's cash money.
That's crazy.
So it's 20% of 16 billion. So people that understand this game, they understand the difference between cash flow and net worth.
Yeah.
What's his name? Numbnuts that's in home arrest. The guy was worth 32 bill at one or 17 bill
SBF.
at one.
Sam Bankman-Fried.
Right?
Yeah.
It's not real.
Yeah.
I'm talking about real cash where they go, okay, here's your cash.
That's what I thought about when you gave that example. I was like, oh, well, he's literally just talking about what happened with their own currency there. None of that money actually existed when they were leveraging it.
What I wanted to tell you guys, I wanted to tell it on the air, is I'm telling you, man, you guys are so smart and so young. You're so far ahead of anybody I'd ever come across in the business. The youngest guy that started at our firm, the youngest was like 24.
Really?
You're
Wow.
6 years younger and you're 4 years younger. And just in talking with you guys are smarter than they were. You know, like it's crazy. But like we talked about, Jack, I think this generation is just so much faster and smarter because of the internet. You guys are able to learn so much on the internet. You go, you tick, 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 tick.
Well, okay, here's the thing. It's like there's this huge gap in like, how do I put it? Like motivation. Because you have people who kind of just get sucked in and they're the consumers of social media and they don't do anything. But then when you have the kids and the young adults who are motivated, like the possibilities are literally limitless because of how much information is out there. But so you have like a very, very small group of motivated young individuals, but then the majority, like that, probably this, I'm just, this is kind of from my speculation. Back in your day, I'd say the majority was more motivated than the general population of youth today.
Maybe, but like you bring up a good point. You have two types of people in the world: content consumers and content creators. And so maybe there are for every content creator like you guys, there's 10 consumers.
Yeah, more than that, I would say. And it's not
Right,
even.
I would say.
Yeah.
So maybe for every because in life, in like the guy that's first place, and then there, like in Supercross, there's like back in the day it was like Ricky Carmichael. There's like first, second. It's like who's gonna get second this week? Because the guy that's gonna win is like when it was Ricky Carmichael, he's winning. Like nobody's gonna beat him. The battle is for second, and second and third, and then there's the other 20 guys that on any given day they can flip flop 18th place, 7th place. They don't, you know what I mean? So and then at the trading it was the same thing too. So it was like, so there's that one guy and then the guy that's trying to beat the one guy and then the other 18.
Yeah.
That's been my experience in life. And then when you look at neighborhoods, it's 1 to 9. There'll be like one Beverly Hills surrounded by 9 pieces of shit. It's like one rich neighborhood and 9 poor neighborhoods.
Yeah.
So there's like the owner of the company and then the employees.
Yeah.
Yeah.
How many owners own the company? 1. How many employees? 1,000.
Yeah.
10,000.
Right.
See, so to me, you guys are like the owners. You guys are like the owners. Like you're different. You're something. I don't know why, who, what, but something's got you fired up. Maybe it's. And a lot of times.
Yeah, it is.
A lot of times too, it's the quiet guy. It's the quiet guy that's pulling all the levers, doing all the, you know, he's the mover. He's the guy that does a lot of the doing.
Yeah.
But in any event, I just want you guys to know that, like, I've never met anybody that doesn't have what it takes, except for one guy. I've only had one guy that he didn't have what it took, and I should have noticed the red flag. He's much older. He's an older guy. He's like 40 years old, but he would fall asleep.
Really?
That picture I sent you. There's a guy on a computer.
Yeah.
Sometimes, because I was teaching him how to pass the Series 3, and then I'd be sitting there, and then he would go like this, just fall asleep.
Yeah.
And he'd be talking. He'd be talking. It would be like you're telling me something. So Eric, I was saying, and I was like, what just happened? I never met a narcoleptic before, you know.
Oh my God.
And I just thought, I was like, oh, this guy's got narcolepsy.
Yeah, or something.
But what I didn't know is when you have narcolepsy, you're not going to be a good trader.
Yeah.
What are traits of a good trader?
Okay, that's a great question. What my experience has been, because of the way I trade, my experience has been the guys that make good traders are the guys that are, like they're bean counters. You know, when you go, oh, what do you do for a living? Oh, I'm a retired accountant. Oh, what do you do for a living? Oh, I'm a retired engineer. Oh, I worked at, Jet Propulsion Laboratories. Like they're all these these numbers guys. And so I could sit down with them and go, okay, well, we can sell that option and buy this option. We could do this, we could do that. And they could just roll with you. Boom, 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 boom. No matter how many numbers you're crunching, they're just rolling. But if you're a waitress or a hairdresser, my experience has been after about 5 minutes, they start going like this.
Yeah.
One time I had this cool trade because of the pricing. Option prices change. So I will say this. A lot of people are like, oh, what strategy? No, come on, guys. It's not like that. The option strategies, like the CME put out a book, the 25 proven trading strategies, the 25, butterflies, iron condor, calendar, this vertical, credit spread, what have you. You don't just go, I love credit spreads. Really? Under all conditions? What? Stupid? No. So to me, the marketplace is like a golf course. So if I need to pull out the driver, I need to pull out the driver. You don't pull out,
I like this.
You don't pull out a putter on the drive.
Yeah.
You don't put on a putter. So you got to understand, when do I put on a butterfly? When do I put on credit versus debit? And it is all based on how much is the option. So if I can buy an at the money option for peanuts, I would buy it. Why would I sell it? What started my whole career, I'll be honest, I forgot about what got my whole career off the ground was I bought a boatload of at the money gold calls for like 6 months at the money for $500, which was less than it would, the interest would be to hold physical gold. It was insane. So I remember buying them thinking, who in their right mind would ever sell an at the money gold call at $275? It was $19.99. And I was buying it for the Y2K. Now, we talked earlier about raising money. Well, a lot of it has to do with what is it that you were, when it was time to buy oil in the 90s and the early 2000s, the time to buy oil was at $10. The time to buy gold was at $275. You couldn't give that shit away. You couldn't give it away. So nobody wants to do the right thing. They don't want to do the right thing. They want to do the wrong thing. They want to buy oil at 140. They want to buy Bitcoin at 16,000 or 65,000 for that matter. They want to buy it at 6. They want to buy the high, and then at the low end they don't want to buy it. And so I had to present to people, look, Y2K is around the corner, and the computers supposedly they're not going to read it, and there's going to be a spike. So it made sense. They're like, oh, okay.
Yeah.
So the people in the Midwest, they bought it. And they bought a lot of them. And when gold popped up to like 330, those options went from literally $50 to $3,000 each one.
What? How much money do you have in those?
I had a lady. She was a chef in New Orleans.
Yeah.
I forget her name, and she bought them for $500. This was when gold was at like 275, and then the British dumped it in the summer of 1999. It dropped a little bit lower. down to like 255, 260. And her $500 options went down to $50. It was great. Like maybe a month went by and then the move, $50. So she calls me up. She's like, how much are those options worth? I'm like, $50. She's like, oh, 50. Sell them. I don't want to lose all my money. And at the time I was thinking, yeah, but it's not the Y2K yet. It's like, it's not January. So I want to lose all my money. And I'm thinking, yeah, but you're already down 4,500. Like, what's another 500? But then it's like, well, 500, you go out to dinner, I guess. Right. So I sold them. A week later, I think it was September 9th, the Washington Agreement was signed that the countries couldn't sell any more gold. Gold popped right to 330.
Oh.
But before that happened, right when I got off the phone with her, she was like, oh no, it's like all bummed out. I hung up. Next phone call, this guy, Kirk McQueen. Hey, what are my gold options worth? I thought, oh God, here we go again. And I told him $50. He goes, $50? Woohoo! Buy me another 30. Buy me another, And I'm like, well, I can get much closer. So I bought a bunch more for him. And when gold popped up, that lady called me. What are those options worth? Well, the $300 calls were $50. And when it went to 330 in futures, it's 100 ounces. So they're worth three grand a piece, $50, worth $3 grand. She would have made, so instead of $500, instead of making 30 grand, she got $500.
Wow.
Darn.
If she would have held on for 3 weeks, she would have made 30 grand. But instead, she got her $500. It's a true story.
Yeah, it's tough. It's a tough loss.
True story. But to go to your original question, the folks that are really good with staying, maybe they got to drink coffee, whatever they got to do to keep that brain awake.
Yeah.
To crunch those numbers. And I just want to say one more story. I'm going to give it to the viewers. This is one of my favorites.
Okay.
So I remember one time I was looking at some trades and I found a trade where I couldn't lose. I was like, oh my God, I want to put in 10 million. I want to put 10 million in this. Well, I'm looking at the the closed prices, the settlement prices. But when the actual real market opens, there's a bid ask. So you got a bid ask on 4 different pieces. So the dynamics change. So the one thing that I had known for many, many years is there's no free lunch. There's no free lunch. There's some sort of a risk, right? Well, flash forward, I got a guy that I'm helping. He's a retired guy, smart guy. The way you guys are young and super smart, this guy was older, and I knew, oh man, that guy must have been so much smarter than me when he was the age I was. Because let's say I was 40 and he was 60. Yeah. And he could roll real good with the options. I thought, I'm 40, he's 60. When I'm 60, I probably won't even be able to count to 3. Right? So I was super impressed with how an old guy could still be smart. And I'm super impressed how you guys are so smart.
Thank you.
So anyway, this guy says, I'm teaching about ratio spreads. So I'm like, oh, we'll buy one, it expire in a week, we'll buy one and sell 2, and they'll cover the price. And he says to me, oh, why don't we buy one and sell 10?
Yeah.
You guys ever done ratio spreads?
I haven't.
No. I used to be. We won't go into it, but
he goes, why don't we buy one and sell 10? I'm like, oh, no. Oh, no way. Are you crazy? You'll get destroyed. You'll get destroyed. That S&P goes up even a little bit. Those 10 short puts you sold will explode in volatility and kill you. No. He goes, like I said it, like it's guaranteed you're going to lose. And he goes, oh, why don't we do the opposite? And I thought, damn, that's a good idea. Remember, I got all these years of experience, but I got experience doing what, you know what I mean? Like it takes like outside the box thinking. It takes like, you didn't even know what he was saying. Like if you look at all the RFQs, request for quote, on all the different strategy, the tree, the Christmas tree, the jelly roll, the inverted tree, all those crazy, option strategies, you put it to the exchange to get a bid ask. This wouldn't even be on there. A 1 by 10. What the hell is that? So I look at it, I go, man, we could buy 1, sell 10, or we could sell 1 by 10. And we did that. We went to this options trading meetup, and the guy that hosts the thing. I'm like, hey, Nick just did a 1x10. He goes, oh, 1x10. I go, no, Ron, you don't understand. He bought the 10, sold the 1. So if it does move, and he's like, oh, he bought the 10. Whoa, let me flash forward. So here's the $2.6 million trade. So my customers, I have what's called a block trading account. So that means I push the button, bing, for one. I push the button one time, and it goes to all the accounts. This guy gets this many. This guy gets this. Like it knows.
Wow.
Like
Oh, okay.
The big customer gets. It knows. All I have to do is push one button. Or back then I used to call the floor for the big S&P, right? And I didn't trade the mini. I traded the big because the guys on the floor can get me the price. And it was my block. So like if I put an order that was not the size of the block, so you gotta understand, the big S&P is like 5 minis. The big S&P is 5 minis. And my minimum block was 40. So if you go, that'd be like 40 times 5 is 200 minis. So I have to trade 200. Every trade I do has to be 200 mini S&Ps. Because if it's
Wow,
I could
okay.
do 200 or I could do 400, but I can't do less because then back in Chicago they'll be like, hey, where are these? It's not who gets what.
Yeah.
So it was nighttime, and I look and I see an at the money, and prior to that, my technical analysis experience, I can see, okay, here's support, here's resistance. It got down to support, it bounced up to resistance, then dropped back. Like it just ping ponged back and forth between support and resistance, like 3 times. And it was a pretty wide margin. I was like, wow, a fellow could have made a lot of money buying the support, selling the resistance. That's not my game, but I'm identifying that pattern. And I thought, now it's back at that support level. It's Tuesday night. And I'm gonna send you guys this trade because if you could ever see this trade again, put it on. So it's at night, and the at the money call is going for 10 points, right?
Okay.
30 points above the S&P. 30 points above the S&P. The options are going for half a point, 0.5. And I'm like, okay, so we had just done the 1x10s the previous week. So I'm like, okay, so I could sell the at the money call and buy 20 of the 30 points out of the money call.
Yeah.
This can be 10, and the at the money was 10 and a half. Wow. So I received in 10 and a half. But before I received it, I'm like, okay, so they're going to give me 10 and a half, and I'm going to spend 10 for the 20. Now, I don't know how familiar you guys are with deltas, so I'm just going to tell you, I don't want to, embarrass you in case. So an at the money call is going to have a 50% delta, 0.5.
Yeah.
When the option goes deep in the money, it's never going to go 1-to-1. It's going to go like 0.9, right? Because then the time value goes away. So at that point, it's still always a kind of 0.9, right? So that naked call that I sold is never going to go above 1 point, never. The other 20, once the market goes up 30 points, now I got 20 calls that are at the money, 20 of them at the money. Now those are worth a half a point. Or the delta is now 0.5, so it's 0.5 times 20, which is 10 points. So for every point the S&P goes up, I make 10 on the calls that I own, and I lose 1 on the call that I'm short.
Oh, way.
So for every point the S&P goes up, I make 9 points.
Wow. Damn.
And the deeper it goes, and the higher it goes, it goes from 9 to 10 to 11 because I got 20 of them.
Mm-hmm.
Yeah.
And I'm looking at it, and I'm going, this is too good to be true.
Yeah.
Okay, this can't, because I know the markets, they don't give away free money. And I'm like, okay, what's the catch here? What am I missing? Okay, so it's Tuesday night. These things expire Friday at 1 o'clock. If the market goes up 10 tomorrow, the 1's going to go up X amount. The 20 are going to go to like 0.2 to 0.1 to 0.2.
Mm-hmm.
So, and I got 20 of them. Oh, like I'm like delta. Every point the S&P goes up, I'm gaining 2 points until it becomes 9 points. Like as it goes up, I'm getting 9. Yeah. So I'm like, okay, I can't get beat there prior to Friday. And then, okay, what if we go down? Well, shit, if we go down, that call that I sold for 10, it's going to be worth 5. The ones that I bought are going to be worth a half. So that's even. I could just buy back the one I sold for whatever, nothing, 1 or 5, whatever. So there's no risk to the downside.
Mhm.
Yeah.
Because I'm glad I'm even. I didn't spend any money. There's no risk to the downside. The risk is only, it's not even to the upside. So the only way I could lose is if the market didn't move all week. It just went sideways for 4 days.
Mhm.
And then on Friday, with 10 minutes to go till expiration, shot up 35 points. Now,
Okay.
if you know anything about the S&P, do you think it's going to go, this is Tuesday, you think it's going to go Wednesday, Thursday, Friday? There's a couple of CPI reports in between there. And then all day Friday, just sit flat. And then with 15 minutes to go, shoot up 35. Because now or shoot up 30 points rather. Because it would go at the money on my calls, and the other one would be 30 points in the money.
Yeah.
No, that's not realistic. But that's how
Yeah.
you can get beat.
Wow.
And that's how you can get beat, is if it, you know what I mean?
Yep.
And so I was like, oh no, and I'm at the support. I'm like, it's a no-brainer. I bought 40 mini S&Ps on my block. But get this is where it gets crazy. Now remember, my block is 40 bigs. So you got to go 40 times 5. Now the contracts that I'm buying, remember, I'm buying 20 for every one.
Mhm.
So if I sell 40 bigs, that means I got to sell 40 times 5 is 200. I have to sell 200 mini S&Ps, right? I got to sell 200 of them.
Mhm.
And then I have to buy 20 times 200. So then you go 20
4,000.
times 200, and you're at 4,000. So I have to buy 4,000 mini S&Ps
Jeez.
Oh my
and
God.
sell 200.
Wow.
So some odd, so 2.6 mil would have been, right? 2.6 mil because I got 4,000 minis and it went 10 points in the money. So it closed like at that Friday, it closed at like, I want to say 14 points in the money. So you go 14 times 4,000 times 50 is 2.8 mil.
million.
Jeez. What a,
That's
I
a
would-
trade.
yeah. Darn.
But 2.8 mil in 4 days
Wow.
on a trade that was like too good to be true. But the volatility at that time was what it was.
Yeah.
Then as time goes by, market gets a little bit more volatile, and now you can't buy an option 20 points out of the money for only a half a point. Now they're more expensive. So when the market condition changes, it's like you're buying things and they're giving them away for free, and then all of a sudden you see me, it changes with that one. I wasn't able to get the whole 2.8 million because I couldn't wrap. First of all, I had limits on how many minis I can do.
Mhm.
Yeah.
I had like limits. So I have to call Chicago and say, hey, my block is 40. I'm buying you know what I mean? And I remember thinking, man, if that thing gets assigned in the money, now I'm short the few, long the few, I could lose millions of dollars really quick.
Yeah.
And so that combined with the other thing, I ended up with, I think I did 2 sets of 40. So I made that, whatever it was like maybe 6 figures, but I was so bummed I didn't make like the 2.8 mil.
Wow.
Yeah. Right.
And then I tried to replicate that trade,
Mhm.
but it
Couldn't
was
find
like
it.
the great trades are there for a millisecond.
Mhm.
The crummy trades are there sitting there all day waiting for you to buy them.
Mhm.
Yeah. Well, I mean,
That was,
I wish we could keep
wildly
talking.
fascinating
but, yeah,
story. We
great
could
story.
keep going on.
I know. Wish we could keep going. Maybe we'll do a part 2 or
So
something.
I'm going to send you the rules to that trade. I'm gonna
Yeah,
send you
please
right
do.
now.
Please
We'll
do.
put
gonna
like a
send
link
you
or
the
something
rules
for
to
our
that.
viewers to view that. Real quick before we conclude, I see you got a stack of books back there. What are some of the best trading books you recommend? Whether you're beginner, intermediate, or you're close to owning your own fund. What are the best trading books?
This is like 1/20th. These are just random books that people gave me. These are like the study material.
Mhm.
Like your Series 3, Series 7. These happen to be like the SIEs.
Yeah.
So you got a book to read, get like a Series 3 study material,
Mhm.
study that. And then some of these are just like commodity trading advisors.
Nice.
Okay.
There's another one.
Nice.
Okay, that's a
And
good
who
one.
beat Wall Street.
Okay. We'll
But
put the
these
links in the
books-
description for
these
anyone
books-
interested.
these books, well, these books, they come out every year.
Yeah.
But because I trade primarily the S&P 500, these are almanacs, like every year. And I don't recommend anybody read them because if you don't know how to use them, you'll read it wrong.
Yeah.
But these are like every year, like 2015.
Okay.
17.
Cool.
18. 19. 20. 21.
There you go.
Stock Traders Almanac. So
Okay.
like that, the Stock Traders Almanac has a lot of juicy little tidbits if you know what you're looking for.
Mhm.
Where when you're an S&P trader and you'll see that on a certain days, like the market, it just goes to shit, 19 out of the last 20 years on that particular day.
Mhm.
Could be, the day, whatever. It's very helpful. It's $50. No, it's like $50.
Yeah. Okay. Cool.
And but for beginners, anyway.
Awesome.
Well, yeah.
We have to end the episode. My laptop's gonna die.
2% on the
We're
laptop.
running out of time, but today that was a great episode.
Thank you, Eric,
That was
so
awesome.
much for coming on. And I mean, a part 2 might be in store in the future. We also want to do in-person episodes. So, hey, maybe we'll be in California and
We'll go visit.
we can meet up with you.
Totally.
But
Yeah. Cool.
You guys are more than welcome to stay at my place.
hey, we
you.
appreciate
You
it.
guys are
Eric.
more welcome to fly out here. You can stay at my place. I got plenty of room.
Thank
Oh,
you,
yeah.
Eric.
I got like great stories. And if anybody has a specific question, they could just, ask it in the comments,
Mhm.
and I'll read them.
That's awesome.
I'll respond.
Okay, take
Great.
notes of that, guys. All right,
Thank
sweet.
you.
Eric, thank you so much for coming on. Don't hang up just yet, but
We hope you guys enjoy.
yeah, see you in the next one.
All right. Bye.
Peace.
Bye.